Hi, it's Jared Rogers here from Beyond Accountancy. It's the 20th of June and we're approaching the end of the financial year, and a lot of people are interested in topping up their super before the end of the year to make the most of the limits and to avoid overpaying tax in 2021. So how do you work out the limit of how much you can put in in your super fund for 2021? Well, let me step through it in 4 steps. So we're going to work out our carry forward caps, add that to the standard cap to get the total for the year, work out how much has already gone in for the year to date, and estimate how much more will go in between now and 30 June. For example, one last employer contribution you might be expecting for the year. So try to simplify it for you guys in a way you can replicate at home by putting the steps into a simple table. So step 1, we're going to work out the carry forward cap. So there's a $25,000 cap every year. If you didn't use the whole cap, you may be able to carry this forward to the next financial year, and you can do that for 5 years. However, this law only came in on 1 July 2018, so it's only 3 financial years where you can combine your super together. Let me show you an example to help flesh that out. Firstly, if you've got more than $500,000 in super, and technically speaking, if your total superannuation balance was over 500,000 at the end of the last financial year, then your carry forward cap is nil. You can check this on MyGov. Now, all these screenshots are from the online services for tax agents. It's very similar to MyGov, but it won't be the exact same menus, but they're all going to be in the super heading. So you check your total superannuation balance to see if you're below 500,000. Most people are. So say you are to $500,000, you can carry forward your contributions, and you can find this on MyGov. Now, just a little disclaimer, if you're in a self-managed super fund, or you've made personal lump sum contributions and claimed a deduction, or even if your super fund just reports incorrectly, which I saw the other day with a client, then this data won't be accurate. But normally it's pretty reliable, but just bear in mind it could be wrong. So how do we find it? Again, under the super headings, we've got to choose carry forward concessional contributions. In this case, there's $10,000 left in the cap that the person hasn't used in the last couple of financial years. Obviously, this is a fake example, but that's what the screenshot's going to look like. So we add that number, so it's that bottom number there, the 10,254, add it to the standard cap of 25,000. That gives us a total cap for the financial year of $35,000. So the next step is to subtract what's already been used up of the cap, so we can work out what's left. So again, jump onto MyGov. This time we're going under concessional contributions, not carry forward, and it'll show the year-to-date contributions. So far this year, there's been over $7,000 of contributions for this hypothetical client. Right, so we're going to put that in the table. Before we subtract that, there's one more figure we need to know, and that's what hasn't gone into your super fund yet. So it's important to realise that your employee contributions count towards your superannuation limit, not when they're shown on your pay slip, but when the money actually lands in the super fund. And this is the hardest of the 4 steps, because many employees are unpredictable with the timing of their payments. So let's say you've got a fake superannuation fund that this taxpayer is part of. If you go into MyGov, go to Super and then Fund Details, and then click on the hyperlink on the name of the fund. It could be Colonial First State or Australian Super or AMP, whatever it might be. When you click into that, you'll get a history of transactions. Click on the Download button, click on the CSV button, and you'll get a spreadsheet. And you can look at the history here. You can see there was a couple of contributions in November that were late, and then there was one a month for December until March, and then nothing in April, and then 2 in May, and then it's very sporadic. So it's going to be very hard for this taxpayer to try and work out how much their employer might put in June. It might be nothing, or it could be 3 months worth, who knows. So what you might do in this situation is See, the biggest contribution they got for the year was about $363. If they got 3 months times that, that'd be about $1,100. So we're going to just assume worst case, assume that the highest employer amount, so we're not over calculating the amount left. So we've worked out our cap, 35,000, minus what actually went into super, minus what might still be to come, and that's where we get our amount, $26,790. So that's how much could go into super. How much should you put in? Well, we can't advise on that. We're not financial planners. We have a financial planning service now, but this is just general information. It really depends on individual circumstances, how close you are to retirement, how much super is a goal of yours, how much free cash flow you have to afford the extra contributions. All that comes into it. If you're looking to maximise your tax advantages, it's good to top up super, but actually with this rolling cap, you've got time to wait. So if you miss out on topping up super this year, you haven't necessarily lost the opportunity. You could carry forward to next year. How do you do it? How do you put extra into super? Do you need to tell your employer you want to do a big salary sacrifice late in the year? Well, no, this time of year, it's too late to do anything about your payday, but you don't have to do your contributions through your employer. You can just do them yourself directly to the fund. So 2 steps, pay the money and do the paperwork. So the paperwork is called a notice of intent to claim a tax deduction form. And I'll go through an example of how that looks now. There's only 3 sections to it. Section A is your details, your tax file number, your name, date of birth, address. And then section B is the super fund details. So you can find this on the super fund's website, at least 6, 7, and 9, your member number. You'll be able to get on MyGov. In fact, all the details, 6, 7, 8, and 9, you can find all of those on MyGov. Part C, the contribution details. So if this is the first form you've done like this for the current financial year, then you're not varying it, so you'd put no. Put the year, put the amount that went into super, and the amount you wish to claim as a deduction. In most cases, the amount you put in, you want to claim the lot. So it's going to be the same number in line 12 and 13. Then you just sign it. Make sure you send it to your super fund. A lot of people forget to do that, or they might email it and the fund doesn't accept it by email because many super funds are old school. So just be really careful with this. There's all sorts of reasons how this form can go wrong. So it's really important to get the money in by the cutoff date. So for most funds, it's either the 22nd or 23rd of June. So the reason I'm sending this video out now is in case you wanted to make a last-minute contribution. You really have only got a couple of days to do it. The paperwork, now that doesn't need to be done by the end of June or by the 22nd or 23rd. You've got a while to do that. Just make sure you do it properly, as I showed in that demonstration. But the timing's important. So you've got to have done the notice of intent form by the earliest of these 3 dates. So the date you lodge your tax return, 30 June next year, so for this year it's 2022, so say you don't lodge your tax return on time and you're a year late, you still need to do your super paperwork by 30 June 2022. Otherwise, when you finally do catch up on your tax, you'll be denied the deduction, and you have to do done the form before you close the super fund or convert it to an income stream or a pension account. All right, so just make sure you get the paperwork done before you do anything to your super or lodge a tax return, because you don't want to miss out. After putting your hard-earned money into super and locking it away, you don't want to miss out on the tax benefits that you're due. And finally, if you're keen on super, it's worth noting a couple of changes from the 1st of July. The super guarantee, so the amount your boss has to put into super, will go from 9.5% to 10%. And the limit on super, the concessional contributions limit, will go from 25,000 to 27,500. So if you're trying to salary sacrifice and max out the superannuation cap, then you might need to adjust the amount that comes out each payday to get to the new limit. That was helpful. Our online calendar's open now for appointments, so for any of you guys who are looking to book in in July, August or September. That's now all available at our website. If you want some more help with choosing a super fund, insurance through super, self-managed super funds, all those sorts of things, we actually offer a financial planning service now, and we'd be happy to review your super and your overall financial position and see if there's anything we can do to improve your situation. Other than that, until next time, thanks for watching and goodbye.